Look at what happened. The markets came down a few days and everyone is freaking out. Someone do something, they said. The Fed must act. They haven't announced a new program in weeks, right? Look, let's be honest here. This is a complete fraud. We all know it. You know it. They know it. It's not as if this can continue forever. The question is, what have they prepared for what's coming next? You came here for the truth, so let me unveil that for you. I'm talking about a mega jam-packed video. I want to look at what's going on with the Federal Reserve. That is front and center on my radar. They have made a little change. I wanted to bring that to you to keep you up to date. On this channel here, I give you all of the information that's actually important. If you want to talk about all that nonsense that's going on out there, there are so many different things that the mainstream media will cover. The alternative news went off in left field. I don't know what the heck is going on. This is the data. This is the important information that's going on at the central bank level, the white papers that are out there and the data that's underneath it. I bring it to you. I also want to note what's happening with real estate, because right now there are so many different sides to it. You look at the house down the street, you look at what your house is worth on Zillow and all of that business, it's going to give you one picture. I get it, but there are so many different levels to real estate and I highlight all of them. When you look at the Case-Shiller index, you can see what's going on with the prices. That's very clear. But what about all of the other aspects? I'll cover some of that today. Let's begin. I thought I would begin with this article here, kind of set up the rest of the video. Henry Kravis says that the market is wilder than at any time in his career. Look, we're talking about the situation in 2020 that nobody expected. Nobody had a way to prepare for financially if they were going like it looked like everybody was, pedal to the metal, put in everything into tech stocks, do not invest in value whatsoever, just go all in. I've been investing for over 50 years. I don't remember a time when I've seen such volatility as we see today. Just look at our markets in the US. We're up one day 300, 400 points, and the next day, for almost no reason, we're down 400 to 500 points. This, of course, if you look historically, is very unusual, not in terms of the points, but look actually at the percentage terms and ask yourself what's really causing it. You know, it's funny because you can ignore it in the market one day and then the next day it means something. There is truly something fishy going on, and that's when you have manipulated markets. This type of activity takes place. Now I want to touch on what's happening with the Federal Reserve. The Federal Reserve sharply reduced the minimum loan size in its Main Street lending program, potentially opening the emergency facilities to more U.S. businesses at a time when Congress remains deadlocked on additional aid. By lowering the minimum loan size to $100,000 from $250,000, the Fed was responding to widespread calls to make Main Street easier to access for small businesses. Look, this actually was a minimal, very minimal uptake. I don't remember the percentage here, but let's say something like 1% or less. 1% or less of what they said that they would actually loan out. The Federal Reserve shouldn't be giving loans to businesses. This is not part of their structure whatsoever. This cannot be happening. They're already bailing out companies like Apple, the biggest company in the world, through back doors by buying the corporate bonds, and they're doing the Main Street lending. It's ridiculous. Anyway, this is what they're doing and why. As they mentioned right here, the Fed's announcement comes at the end of a tumultuous week in the markets. You have a bad week in the markets and now the Federal Reserve has to introduce a new program or loosen up some regulations somewhere. It's truly scary to see how much is really relying on the Federal Reserve today. And that brings me to this article. The Fed could face more pressure to act. Quote, they don't have the luxury of time anymore. We have seen more activity from the Federal Reserve than ever before, and yet I see this all the time. When is the Fed going to act? I mean, come on. We are talking about interest rates at 0% today. We are looking at a balance sheet of over $7 trillion. In fact, it's heading towards 7.2 trillion. I haven't checked today. There is an update. But looking at all of the different alphabet soup, let me put the ABCs in here, all the different programs that they're doing, including the Main Street Lending Program. Sure, it didn't really take as much as they would have hoped, or at least what they claimed they had hoped. And it's just one of many, though. There have been trillions of dollars that have been added into this system through one means or another, and they want them to do more. I mean, that is just, it's sad, in my opinion. With inflation still elusive and a host of questions surrounding an economy that just set a single quarter record for growth, the Fed faces a choice of whether to wait for conditions to unfold further or act now to provide some extra help. That's right, you just had a GDP number of 33.1%, and you're telling me that the economy is in need of more stimulus. You've already pumped in globally $20 trillion just from the central banks. You look at what's going on with all of these different governments and the actions that they have taken, and all of that money is being sloshed around. We have seen stocks go accelerating at a rate we have never seen before in history, and all of this, still more is required. It's okay if the stock market goes down. Can we just get to that point? Can we make that known? It's okay. If the stock market loses all, let's say 50% from today's numbers, that's okay. Nobody is going to get hurt in the end. You just have to take it. It's part of a natural cycle. This is something that takes place all the time. There are ups and downs, and if you can't hold on, then you need to get out of the game, right? But no, what they're trying to do is control it and make it go up permanently. That's what they tell us anyway. But looking at all of this, it should really be worrisome for those who are heavily invested. Quote, I just don't see the benefits of waiting until December. A lot has changed in the past 2 weeks. Almost all the worries they flagged in September have materialized or are in the process of materializing, so they don't have the luxury of time anymore. Truly an embarrassment to read something like this. And just a couple points here. Further along in the article, they're essentially making some of the same points, saying that, hey, you've got that 33.1% annualized GDP gain, and yet we've got some issues going on in the economy. They talk about, a bunch of things that I think are important, but I just want to note this. The market just wanted more follow through and obviously hasn't gotten it. In September, maybe they felt that there was no urgency to do anything immediately. What has changed between then and now is the urgency has increased. Come on. They have been pointing to all of the little things that, in my opinion, are not very important. Look, the stimulus is coming. In one way, shape, or form, they're going to get stimulus. You know that. Why would the market react so negatively here? It doesn't make any sense. You know that there is stimulus, and there's already been stimulus, trillions and trillions of dollars. We saw how all of these different individuals were putting their money in their Robinhood accounts. Of course, everyone was doing the same thing. That's why there was such a surge afterwards in spending. But the number one spender, and the reason why the GDP number is so high, even though it's an annualized number, it was high for sure. Number one, you had a certain period of time where there was no spending, where people were kind of sitting back. And then as the stimulus got approved, as there was all these different measures put in place by the government spending was the number one factor. Government spending money. It's not the average individual necessarily, although they did spend their stimulus checks and so on. But this is the point that so many miss. Energy's plunge is now the worst among the S&P sectors dating to 1928. I couldn't believe that, but it looks like it is the case. I'll show you a chart in just a second, but for now, energy stocks are suffering their worst retreat in almost a century. In the biggest drop of any sector going back to 1928, energy stocks have lost 60% more value than the S&P 500 index has. That is just, it's shocking to me. to see it, but that's the way it is. Look at all these different companies like Exxon and others that are laying people off at this time, even though really, when you think about it, the price of oil came down significantly. We saw that, and it had come back up. Well, it's not really where they need it to be, but that price range, let's say around that $40 a barrel price range, is where it's been for quite a while, other than that dip that it took earlier. And it just leads me to believe that there's other things going on. It's actually the consumption itself, not necessarily the price of oil, the consumption. And that is an indicator that we must use. Oh, the economy's totally fine, but we just have this very low level of consumption. It's not just because of people not driving around in their cars anymore. Look, some people are saying, I go everywhere, it's so busy everywhere. Oh, I drive this and that, and I do the deliveries, and I am seeing people out on the streets. It's the busiest it's ever been. The ports are so busy and all this stuff. But then you look at the actual data, in some things, it is not so nice. And that just tells you that there are always pockets. There are pockets in different sectors. There are pockets in different places in the country of the United States, or take it around the world. It's the same thing. There are going to be areas doing better than others. Taking a toll. You could see the energy sector tumbling, and it's been doing so, essentially peaking out in June, where after, that dip that really hit back in March, it came up into June, and since June, it's been falling. That's all for this video. If you found it informative, hit that thumbs up button. By supporting me, you are able to get these videos higher up in the YouTube search rankings. I really do appreciate that. If you want to learn how to sell stuff online, you can do so at the AmazonGPS.com for free. Check it out. The financial system is complex, it's convoluted, very difficult to understand, but I've made it very simple in these two books. You can get the information you need to know at the link in the description below. Definitely check it out. And if you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? I jam-packed it with data. Definitely want to check it out. Click it. I'll see you there.